Hey, what's going on, guys? This Terrence Ray, back at you with another stock market update. Going live right now. I wanted to come on because I wanted to talk about a trade I just put on, but we'll read the tape action right now, then we'll get to that. Right now, the market is actually kind of flat. It opened up down a little bit. When I first woke up this morning and looked at it, it was down, and uh, then as the market got closer to the open, it moved up a little bit. I think we even got went green on the day. But if you're looking at the SPX right now, you can see it looks like a green candlestick, but that's because it opened with a small gap down. If we were to look at, I'm gonna throw up a 1 minute chart just to show you. So here you go, open here, and you can see it retraced and closed this gap. And so that's why when we look at the chart right now, this is what we're looking at. So we've basically had a V bottom. Yeah, now if you've been following me the last couple of weeks, I thought that this down move would continue to go down. Maybe we got to pull back in here and maybe finished it, but it looks like the market is almost, you might as well say at this point, retrace this whole move almost. Like we are, so it took us like 3 weeks to get down to here, and then like 2 weeks to darn near erase all of it. And so now here we are right here. We're outside of the expected move for the week. I think that the expected move for the week may have been like I think it was like 100 from the weekend video, 105 or something like that. And as you can see, the market opened up on Monday and it ain't look back. So all the panic of the previous weeks has been erased for the most part. Now today I was just thumbing along, looking for something. One of the things about being a trader, you need to be able to adapt quickly and like change, whatever your thoughts, whatever you think the market's gonna do, change. Sometimes we'll have a set view of the market, and then you'll keep that view, and you won't be able to change it, right? So the market looks like it's in a bullish pattern. So I started looking for trades, then maybe on the bullish side, and it brought me to, and I was just going through. Now I come to over here on this part of the TastyTrade platform. I come look at. I put it on high options volume, and this will arrange. Give me a list of stocks that are in order of how the option volume on the platform. And I just start from the top, start going down, and then I got to Google, and then I came in Google, and I like this setup right here. So all I did, I seen this big wick. So like if you're looking at right here, what was this Wednesday? You can see this wick right here. And so when it wick like that, then you had this candlestick, the body of this candlestick inside of this candlestick. And I think in Japanese candlesticks, they call that like a pregnant woman or something like that. Right. Just I just remember from books that I've read on candlesticks. And so you can see, and then today, right? Now if I threw on my indicators, you'll see that on one of the moving averages, this candlestick kind of like was riding it. So all I did was sell a put spread, right? Came into here on Google. Let's go to the trade tab. I see something like that. I want to be in the monthlies. If you're looking at the option chain, you see these W's right here on the left. These are weekly options. Weekly options tend to not be as liquid as the monthlies, meaning the bid ask spread may be wider. So let's just say if I came into 28, even though Google is a very liquid product in and of itself, so you can see it actually is pretty liquid. If you came in 28 days, you see, about 11 cent from the bid ask spread. That's not too bad. Right here, if you go on the call side, you see about 15 cent on the bid. You got 425 on the ask. You got 440. So that's about 15 cent. Now, and you can see it's fluctuating. Now let's go to the monthly on right here in SEP. And you see how a little bit more tighter it is on right here, 265, 270, 265, 269. That's a difference of 4 cents, basically $4. So the most, you're gonna lose in between making that trade is a couple of bucks, right? Depending on how you put the trade on. That's why I stay in the monthly. So come in the monthlies, and you can see the open interest. You got thousands of contracts, and it's trading on the. You see volume and open interest. So I'll sell the 160, bought the 155. So if I did this right now, it's gonna sell for 118. Now when I did it, I collected 144. So I collected 144 bucks in premium. So it's up like currently, about 20 25 bucks. So this is a cheap spread. This is a way to get bullish. I'm s- Once again, I'm selling the 160, buying the 155. And right now, currently, if I put this on, it's showing I got a 67% probability of profit and an 84% probability of 50% of that. So basically making 77 bucks on the trade. And you can do now if you want to do more, you can do more contracts. Um, if you want to do more of these, like two or three, I advise, like me, if I wanted to make it a larger trade, I would just widen this out, you know, or either go naked. So instead of buying this wing, you could delete this leg and just sell the put, take in $266 and profit. I mean, excuse me, in premium. I'm sorry. Take that 266 in premium, and then of course the closes trade, you buy back the option to close it. And you want to see it's a couple of ways to make money when selling options. You don't necessarily need to be right directionally. This particular trade, well, so I'm short the 160. So right here is what my short strike is. I just need the market to go sideways. It can go sideways, time could pass and it could just be in here and then I'll make money, or it can go up and I'll make money if I'm directionally right as well. And if I look left, you can see we came right back in here. See this gap? And this gap right here will act as some sort of support. And so you see that right there. So this would be a level, just looking at it, that the market would come in and make a support level right here in this gap. Now let's see what Google does, like I said. And then I threw my fibs on. So the Fibonacci retracement on from this high to this low. Once it breaks this high right here, now we got a higher high. So you got low, high, higher, low. As soon as it breaks right here, now we got a higher high. And so now, I'll start looking at targets, my next target. Um, Now if I wanted to buy stock, I probably would buy stock and put my take profit maybe right around 170, right? Even though the Fibonacci level is 171, yeah, probably about 170 right here in the fill of this gap. And that's where I would take profit if I was buying stock. And so, basically I just wanted to come on and go over that trade. The market right now, if we're looking at the overall market, just you got to be bullish at this point, right? The market erased all of this. Now, at some point, it's possible for these gaps to get filled. This expected move level in the S&P 500 can now act as support for the next week. So we could see the market pull back a little bit into here, possibly, right? But overall, I still think we just looking at the stocks, the larger stocks like the Magnificent Seven, they look bullish at this point. We do have a lot of geopolitical risk, you know, out there, with the rumors of wars. We got a presidential election, so we got a lot of stuff going on. So anything can happen with news over the weekend, but we'll just assess that on Monday morning when that happens. So with that, guys, hopefully you got something out of this video. Hit the like button, hit the subscribe button, hit that bell notification. Because a lot of times when I see trades and stuff that I want to, talk about the trade that I've done, I just go live and just, do the video. So with that being said, guys, I'm gonna be out. Peace.